Today's focus, crypto market dropping again, open interest cut in half, even minnows switching positions. Is this downturn really the start of a bear market? Nearly 500 million tossed, misappropriated. Justin Sun lashed out at FTD, but whether he can turn things around in Dubai court is uncertain. The short squeeze setup has taken shape. Does crypto market really offer more appeal than following the trend? B offers crypto-denominated wealth management with annualized returns of 8 to 9% on Bitcoin. Will you get in on it? Monday, December 1st, this is BitcoinTV Chinese channel Billion His Eye. I'm Michael. Now, let's look at the most important 24-hour data headlines in crypto space. Today, the coin price returned to starting with an 8. Today is the 1st. Also Monday, so after the weekly session ended this morning, in our members-only review, we discussed whether seeing an 8 means we're entering a bear market and what the future might hold. Let's first review the market movement throughout November. It was actually quite lively. Bitcoin recorded a trading volume of $507 billion across major centralized exchanges. Although it wasn't as crazy as October, it's still one of the highest trading volumes of the year. ETFs were not to be outdone either, with monthly trading volumes surging to $105 billion. So it's clear that traditional capital still gives a lot of attention to the crypto world. But the real heavyweight, the anchor of the market, is still Binance. Just on Binance spot trading for Bitcoin alone, the volume reached $153 billion. So the market's price movements all depend on Binance's mood. But even amid all the excitement, you can sense a bit of uncertainty. Buying pressure isn't as strong as it used to be. Selling is still happening, and although ETFs are still seeing inflows, the pace just isn't picking up. Everyone is waiting for a bigger reason to make a move, like if the price drops further. If it starts with a 7, I believe the pace will pick up much faster. Right now, it's a classic case of there being plenty of money, but everyone's on the sidelines. If you want to make a big bet, you really need to understand the macro picture. Only if ETFs keep performing strongly will the market truly ignite. Now, let's look at what's happening on-chain to explain the real reason behind this recent drop. So, as Bitcoin makes another move toward 80,000, it's not the retail investors who are panicking, it's the whales who are busy. How so? In the past 90 days, whales have transferred nearly 4,000 Bitcoins to Binance, which is double the previous amount. So we're seeing frequent large transfers, often involving hundreds of Bitcoins at a time. It's clear at a glance that big players are readjusting their tactical positions. Meanwhile, the value of open contracts has dropped from $47.5 billion to $29 billion. Combined with proactive position reductions and strong long positions in the derivatives market, it's like the market has gone through a thorough cleanup. So retail investors are staying quiet with hardly any reaction on their faces. This shows that this round of volatility isn't about panic at the tail end, it's the big players themselves switching rooms. Simply put, the whales are on the defensive, shifting their positions around to lower their risk. But all this moving back and forth is ultimately to make room for the next wave of market action. Once they've finished rearranging, Bitcoin is likely to start a new chapter. We can see an on-chain metric called POC, which has surged directly from $83,000 to $91,000. On the surface, this looks like a strong rebound, right? But on-chain data tells the honest story. The number of active addresses has dropped sharply from 882,000 all the way down to 785,000. This is a classic case of price surging while on-chain activity declines. It's clear that things are dormant, so this kind of divergence very plainly tells us that this isn't a surge driven by new money rushing in. It's more like internal leverage liquidity pulling the price up, a technical correction really. So it's highly likely that the $90,000 level won't hold. On-chain activity is like the electrocardiogram of Bitcoin's real demand. If the ECG isn't showing any spikes but the price is jumping wildly, then most likely this upward movement won't last. History has shown us time and again that whenever things cool down and then heat up, the market tends to drift at high levels and eventually falls back to the price fundamentals range. If Bitcoin truly wants to return to its all-time high, there are two things to watch for. The first is that on-chain popularity needs to come back. The number of addresses needs to start surging, and then we have to see whether capital is actually flowing back in. Otherwise, every rebound we see now is just like a probing attack. Looks fierce on the surface, but lacks real substance underneath. In the short term, everyone should remain cautious and not mistake technical corrections for a genuine trend. Looking at the current trend and technical indicators, we have to admit that the market has entered a bearish phase. Every rebound is a good opportunity for you to reduce your holdings, and every dip is also a good time for you to enter the market. We update crypto news every day for 6 years. Your likes greatly support us. Consider becoming a member to professionalize our channel. Let's check the news. As everyone knows, every partner who has worked with Brother Sun says that making money off him is extremely difficult. If you do not end up giving him ammunition, you are already lucky. But I feel like it actually seems pretty easy to scam money from Brother Sun. Recently, there has been a scandal involving $500 million and stubborn arrogance, and it is connected to Brother Sun. The perpetrator is called First Digital Trust, or FDT. They actually cozied up to the Aria scam group, treating $500 million worth of TUSD like it was their own personal fridge, taking whatever they wanted, whenever they wanted, and even pocketing kickbacks along the way. What's even more outrageous is that after the whole thing was exposed, they refused to admit it and even turned around to help the scammers hide the money. That's corruption from the inside, so Brother Sun couldn't take it anymore. He went public and called out FDT and their so-called boss, Zhuo Zhongqiang, showing everyone with his actions. Some so-called trusts, Tony, you won't be able to trust them for the rest of your life, not even once.
Sun Yuchen stated that FDT's actions not only harm the interests of TUSD holders worldwide, but also openly challenge Hong Kong's financial regulators. FDT actually claimed to have ownership of over $100 million in reserve funds, allegedly exploiting trust loopholes to carry out large-scale financial fraud, which seriously undermines trust in the Web3 and crypto industries.
Personally, I truly think that this comprehensive briefing on the current progress is indeed very necessary, because the dangerous criminals and sophisticated criminal organizations we are currently dealing with are inherently transnational, operating across various regions, and of course this extensive reach is also one of their most significant, essentially, criminal tactics and operational strategies. Their intention is to use transnational and cross-border crimes and money laundering methods across different judicial jurisdictions to evade legal sanctions. You could say this is their original goal.
The Dubai court and the Digital Economy Court have officially ruled in support of the fraud allegations against the Aria Group and First Digital Trust. Sun Yuchen stated that this ruling provides a legal basis for recovering the misappropriated TSD reserves. A global investigation has now been launched. He emphasized that any institution exploiting regulatory loopholes to defraud or embezzle funds will ultimately face legal sanctions.
So right now, what everyone cares about most isn't how this lawsuit should be fought, but whether TUSD can still be used and if it's still stable. Of course, Sun just said one thing. Not only is it stable, it's even more stable than before. In my opinion, as long as Sun is willing to back it up with his earning power, covering this hole shouldn't be a big problem. But there's one thing everyone must remember, and that's this stablecoin. If you want it to last long, transparency has to be maximized, and regulation must keep up. But Sun took a hit in Hong Kong this time, and now he wants to seek justice in Dubai. How should we interpret this move? I'd like to hear your thoughts, so I'll leave the comment section to you. So today, Bitcoin plunged all the way down to around 86,000, and everyone got a real scare, right? But don't rush to any conclusions just yet. There are still people buying at the bottom. If you look at the funding rate, it's still ridiculously negative. What's going on? Right now, being short is basically like paying rent every day. At this point, chasing shorts is pretty much walking right into a trap. If short-term traders just blindly follow the crowd's emotions, it's very easy to get schooled by the market. But from a long-term perspective, there's really only one thing to watch: whether Bitcoin can recover to 90,000 or even above 92,000 in the next half month. If it can hold steady, then I'm telling you, those who are gritting their teeth and holding onto their short positions while paying interest will be forced to give in. They'll all end up pushing the price toward $100,000 together. As the saying goes, the bigger the waves, the more valuable the fish. The calmest people are those holding Bitcoin as their base currency. They're truly zen about it.
Bing BTC L3 is now open for subscription. As the third Bitcoin-denominated financial product in this series, its returns are calculated in Bitcoin, making it highly competitive in the current market. Most similar products struggle to offer an annualized Bitcoin-denominated return above 5%, while Bing BTC L3 offers an expected annualized return of 8% to 9%. Both in terms of return levels and stability, it outperforms the market average.
Aside from AI, this is the most interesting one out there, meaning the companies, the stocks that sold shares and then turned around and bought crypto with the proceeds. Lately, they've been the marginal buyers in the crypto market. So what happens if they stop buying? What happens if they start?
The first two phases of the Lee Standard series have already been running stably. This phase will continue to be issued on the BSC chain, with a minimum investment of 0.01 BTC. Subscriptions will close in 3 days, maintaining the B standard, that is the yield model, to provide users with a low-cost, transparent, and highly sustainable participation channel.
What is Bcamp? Bcamp is a financial product exclusively for our members. Looking at the Bitcoin-denominated returns from the B standard, it has already reached over 7% and we have not closed the position yet. Let's see if, after closing the position on the first phase of the Bitcoin-denominated product, the returns can reach double digits. So Bitcoin is rising. The value of WIN is increasing. On a coin-denominated basis, you can still get nearly 8% annual returns. Looking at UCT's stablecoin financial products, on average for a 3-month cycle, the annualized return rate is between 10% and 15%. If it's a 1-year cycle, the annualized return rate is between 20 and 35%. Of course, in terms of returns, everyone prefers to choose the 1-year products, and that's perfectly reasonable. So if you are borrowing money to enter the crypto space, can't mine, can't trade spot, but you put it in WIN, it's stable, and you can use the bank's money to pursue your excess returns. Here, there are legends of getting rich overnight, as well as carefully scripted scams. This is a dark forest of chaotic development, but it also nurtures the spark of hope leading to the light. The destination of faith is freedom, and the endpoint of consensus is equality. This TV show will guide you through the fog, help you see the future, and together we'll gradually become wealthier. China reiterates its regulatory red line as stablecoins come under fire from 13 ministries. Will this round of crackdown be more precise or even harsher? S&P criticizes USDT, but Citibank analysts strongly support it, saying it's more stable than any other. China's attitude toward virtual currencies has always evolved from "don't mess around" to a situation where no one can escape. In 2013, the central bank and 5 ministries took action for the first time, labeling Bitcoin as a virtual commodity and also telling financial institutions, "don't touch this stuff." In 2017, the crackdown intensified, expanding to 7 ministries, and they directly put a stop to ICOs across the board. They defined all of it as illegal fundraising, and at the same time shut down all domestic trading platforms. That's when Binance started to become the world's largest exchange. By 2021, regulation escalated into an all-out offensive, with 10 departments jointly issuing a notice to clamp down on fiat to virtual currency transactions. The central bank classified all counterparties involved in matching trades and pricing as engaging in illegal financial activities. So, after this Iron Curtain came down, all virtual currency-related businesses in the country entered a phase of complete clearance. Just a few days ago, 13 ministries jointly issued a statement aiming to shift the regulation of virtual currencies from regulate where possible to a comprehensive zero blind spot crackdown.
On November 28th, the People's Bank of China, together with 13 other departments, held a meeting to crack down on virtual currency trading and speculation, directly reiterating the regulatory bottom line. Virtual currencies do not possess legal tender status, nor are they recognized as legal currency. Any form of related business within the country is considered illegal financial activity.
Warning of a fresh rise in crypto speculation despite a nationwide ban since 2021. The People's Bank of China states that all virtual currency activities remain illegal, and the bank is now tightening its focus on stablecoins.
For the first time, stablecoins have been officially defined, stating they are still virtual currencies. They are flawed in ID verification, AML, and fund tracing, becoming a key tool for money laundering, fraud, and illicit cross-border transfers. Strict regulation, enhanced interdepartmental coordination, and improved monitoring of fund and information flows are essential.
As far as I know, the incident this time involved stablecoins. The reason why many private loans and small-scale international settlements have started using USDT is that it directly leads to issues with taxation and capital outflows. So right now, what China's central bank is most concerned about is the actual size of our foreign exchange reserves. Any behavior that attempts to drain these reserves will be deemed illegal. So when a historical trend arrives, if you can adapt to it quickly, you'll find opportunities and gain pricing power. But if you insist on going against the tide of history, have you ever seen any centralized institution successfully blocking historical progress when a trend comes? A couple of days ago, we reported that S&P Global delivered a heavy blow to USDT by downgrading its reserve stability to the lowest tier. They even criticized that while other stablecoins obediently hold government bonds, USDT, on the other hand, stuffs its reserves with roller coaster assets like Bitcoin and gold. How can you call that a stablecoin? Isn't this just the crypto world's adventure combo meal? But let me tell you, we actually welcome this kind of oversight. Even though USDT has a 70% market share, is #1 in trading volume, and is the top choice for cross-border settlements, when its audit reports can only be provided by itself, we still call for a third party like this. It needs to know, you can sit on the throne, but it's best to keep your books open.
In response to external doubts, Tether CEO Paulo Ardoino forcefully pushed back, pointing out that S&P is exaggerating the risks of high-risk assets while ignoring Tether's nearly $30 billion in shareholder equity. He also hinted on social media that BitMEX co-founder Arthur Hayes either lacks math skills or is deliberately stirring things up for competitors. However, Arthur Hayes did not agree, emphasizing that Tether's profitability and its stability are two different matters. The real issue still lies in transparency and risk structure.
Just as this heated argument was unfolding, Citibank's digital asset analyst Joseph Ayoub stepped in to support Tether. He said, "I've spent hundreds of hours researching and drawing conclusions, and my findings are completely the opposite. What you see as Tether's reserves is just the surface. What are Tether's real assets? They're mining, equity investments, and corporate reserves. And they also have a huge stash of Bitcoin. What do you call that? That's being a hidden billionaire." Even more astonishing, he said that Tether only has a team of 150 people, yet they manage $120 billion in assets and make tens of billions in profit every year just by sitting back. So their capital efficiency is like a global top-tier cash printing machine on cheat mode. He pointed out that banks only have a reserve ratio of 5% to 15%, so Tether's liquidity is actually stronger and more stable than banks. It's just that they don't have a central bank backing them, that's all. To put it simply, this company is not just far from bankruptcy, it's basically a legal money printing machine.
CEO Brian Armstrong openly criticized the current New York Times, saying it's become an emotional broadcasting station that no one treats as real news anymore. He also suggested that the most practical holiday gift is simply helping friends and family cancel their NYT subscriptions. Right now, the market is practically treating Kevin Hassett as the presumptive Fed chair, with his odds soaring above 70%, leaving everyone else in the dust. Even Harper Insight was stunned. The hype around the upper arm insider is intense. Those 5 times leveraged long positions have already lost $10,170,000, with a cost basis of $39.18. If it drops below $22.84, it's going to get uglier. A massive whale is about to get liquidated, and the market is just watching the drama unfold. In the past 4 hours, the crypto market slammed on the brakes, wiping out $140 billion in total market cap in one go. It's like some projects went to sleep and woke up with half their lifeblood gone. The whole market turned on a dime, faster than flipping a page. And as for Binance, don't rush to praise it just yet. That 0.02% cleanliness rate only accounts for direct transactions. It doesn't include extortion, hacking, or money that's been laundered through other channels.
It's important to act with integrity. Remember, no matter how broke you are, don't disappear after borrowing money, and no matter how tough things get, always keep your word. You know, no matter what happens, you should always make things clear in advance. I believe that a person's true confidence never comes from how much money they have. It's not about what kind of school badge he wears or who he knows, but about being able to keep his word and follow through even when no one else is willing to trust him. It might not sound like a big deal, right? But there really aren't many people who can truly do what they say. You have to understand, the lower you are in life, the more your character is revealed. Some people use silence to avoid responsibility. Others, even if they're down to their last breath, still want to make things clear. The former are just looking for immediate comfort, while the latter are safeguarding their lifelong reputation. Integrity isn't something you show off for others. He's building a pillar for himself. You have to understand, live with integrity, act with clarity, and never lose the trust others have in you. Especially in Web3, trust is truly hard to come by. Money can be earned again, people can come and go, but once trust falls to the ground, it will shatter into pieces. Remember, in a lifetime, the strongest proof of character is how many people still trust you when you're at your lowest point. If you understand this, give us a like. That's all for today's show. Every day, we'll help you sort through all the news in Web3. Here, we also offer membership benefits. Feel free to check them out. We hope you'll join as a member and support us in making this channel even more professional. We want to lead everyone to thrive together in this bull market. Let's get rich slowly. See you tomorrow.